What is up, guys? It's your boy, No Risk, No Premium, back with another episode of the 2 minute drill for the ESF futures, funky futures, whatever. Hope you enjoyed the video last night. Sorry we had to mush them together. I was out all day, and I just want to get some video out to you guys, some content out to you guys. Um, as for today, what happened? Big old nothing burger sandwich CPI came in at expected, and nobody on Twitter or anywhere was really expecting that. Market ended flat, nowhere. I mean, it was up maybe 0.3 off 0.3%. I don't know. It was up. SPY was up like $1. I think ES was up at what? I don't even know though. ES was up $10, or I'm sorry, 10 handles. Sorry. So what does that mean for tomorrow? Well, interesting candlestick pattern here going into into some resistance area, but a close above the 200-day moving average is crucial. Okay. One thing you cannot ignore. Now, excuse me, 200-day moving average was where? Well, it was 390, 39.95-ish this week. Now it's 39.87 as it's rolling. Because ES constantly trades like, 23.5 or whatever. So it's made its way down. SPY has closed underneath the 200-day moving average. So we'll see what the overnight action brings us. However, we are to a lot closer to resistance than we are support, and we are at this pesky old trend line that has been here since the highs after COVID, right? We see it right here. So what does that mean? Well, we either finally break it or we don't. Now, there's one thing you need to pay attention to on the weekly chart is what? Let me zoom in so you don't freak out at my chart. Is 40.51. Okay, is the 50-day moving average on the weekly. Every time we got under it after we started this bear market, we failed it, right? We failed it. Okay, we can see it right here. The last two failed attempts. Let me zoom in. 1, 2. I happen to also be with this down trend line. Okay, so does that happen again? I don't know. Maybe. We'll see. The banks report in the morning. If the banks are the third largest weighted sector of the S&P 500, right? The XLF, it's probably gonna be pretty important to pay attention to what they all everyone pretty much reports except Goldman Sachs tomorrow. Okay, so you want to pay attention to that 100%. Okay, that comes out pre-market. All right. So we either get a nice trend day up and we go to see 40.50. That's a short. Okay. Above there, we go Ripper Magoo. How are you? 40.80, 4,100. Now, onto the chart. Let me zoom in just a tad here so you can see better. I would love to get a short opportunity if they punch us up to 40.53. Now, guys, that's not a swing short. That's not a reversal. When I'm talking these levels, I'm looking 5 to 10 points, maybe leave a runner. Okay, I'm looking where can I get in the best R&R. That's it. I'm not interested in trading any fluff or any of that bullshit. I'm looking right here. This looks like 40.50 to me would be a nice level. That's where the 50 MA on the daily is as well. Okay, and then above there, okay, I mean, really 4,100 would be the next big level. Above 4,100, 4,110, 4,150, 4,180. Okay, that's if for some reason the banks come in and absolutely crush, which, I don't think they crush. I don't think they, flop. Who knows? I think they're going to pay attention to guidance. It really doesn't matter. All that matters is how they react to the earnings, right? So right now, we were just about down 7 handles. Now we're down about 9 handles. I think we might maybe go test down 39.90. That's where we seem to bounce from today twice in the cash action. Probably the lowest I would think would happen tonight would be 39.64, 39.50. We know those are two important levels. But I think it's all about what the banks say tomorrow. It's probably all about what the guidance is going to be, what they're going to look for. Fed says they're not going to be cutting rates all of 2023. What does that mean for banks? Well, banks need rates low because they'll have more people to lend to, right? Pool of candidates is larger. If they have a larger pool of candidates, they can make more money off more people, off interest, principal, etc. All right. Just simple TED Talk economics 101 for you. Banking, fractional banking, whatever. Right. Also, net reserves, or what's it called? Or excuse me, savings. Savings are down, credit is up. I mean, I don't know. Who knows? Let's see. We just have to see what they come out and report, right? How they react. If we spike down initially, right? If we spike down initially, let me go to the 4-hour here so you can see it. If we spike down initially, look at this 39.50 to 39.60. I take a long there. I really like the long at the 3,900 level as well, right? We know 3,900 has proven to be, right, to be a big level. I would think, let me just get this a little bit. There we go. I would think, right, that these would be scalps, right? These would be scalps. I would more so be comfortable swinging from where? This huge support level, right? 38.03 to 38.25. I would probably leave a runner or two there. Okay, but these short scalps, right? Because we look like we just had a resistance support flip, right? We got up here, this 39.64, got underneath it, then we went out. Now we back tested it. So this next test will be important. I think we initially bounced, could give us at least 10 points there. Okay, so I'll be looking tomorrow on the reaction in the morning, long at 39.50 to 39.64. I know that's kind of a wide range, but you can see this where these two price targets are. Okay, if that fails, okay, if 39.50 fails, I'm very confident we come down and see a test of 39.25, 3900. Okay, 3900. I would look to maybe take a bounce there. I like coming down and looking at 38, 70, 80 level. Okay. But if we decide to just completely sell and have this reject off this trend line, the next areas I really like longs are, 38.03 to 38.25. You would want to look, see this level right here, right where this little demand was, right? I would think that this would be a bounce area. That's about 38.95 to 3900. Okay. Scalp bounce there 100%. So plan for tomorrow, depending what the banks do. Okay. Fade. Okay. Fade 40.50. Long 39.50 in the morning on the reaction. Okay. On the reaction. Okay, and then throughout the day, if we get a breakdown 39.50, 3900 probably comes. Okay, and if that breaks, that's a warning shot. We're going to go down pretty far. Okay, let me just give you macro levels so you have them all right in front of you. Okay, above 39.20, which was today's high. I'm sorry, 40.20, 40.50, 4100, 40.10. Above 40.10, you are going to see 41.50 and then 41.80. Okay. So you can see it here. Okay, 41.50. So 4100, 4110, 4150, 4180. Okay, now below 3900, things are gonna get kind of oh my goodness. Thank you. Little froggy under there. If we break down from 3900, okay, fully expect us to take this down to the 3820s. Okay, 38.20s, you're going to probably produce a bounce 38.03. But if we get down below there, 37.55 and then 37.08, you guys can see demand here. This was now CPI print today, CPI print there. So that's last two. 3 CPI prints ago was here. This was the close. This was the Ripper McGee. So 37.55. That's a long, 100%. Okay, 37.08 below there. All right, guys, it's Friday. Take it easy. If you made money this week, that's great. Probably just take tomorrow off. Maybe a few points scalp. If it's there, if it's not, don't worry. Get out, enjoy some sunshine. And of course, don't do anything fucking stupid. We'll see you bright and early